Welcome to tonight's episode of Beyond Focus TV. I'm your host, Lydia Patel, and as always, I have a very special guest for you, Sam Dunston, who's the National Allotment Insurance Agent. He'll be with us for the next 30 minutes, so stay with us. You're watching Beyond Focus TV.
Beyond Focus TV allows you to discuss contemporary topics affecting the Caribbean people on both a national and local level. The show features informed guests who offer insight, debate, and evaluate various issues. Beyond Focus TV builds on the station's mission to provide useful information to the Caribbean people in New York and abroad. Beyond Focus TV, where our viewing audience can get educated, informed, and empowered.
Welcome back. You're watching Beyond Focus TV. I'm Lydia Patel, sitting here with Sam Dunston. Sam, welcome to Beyond Focus TV.
Thank you.
Well, it's great to have you here. And Sam, we'll be talking about life insurance. It's a great topic. It's actually something that's so vital to our community. I think a lot of people still are misinformed for the most part. So that's why we're bringing you here. This is your field. This is your world. So you're the specialist on this. So first of all, let's talk a little bit about who you are, your background, and how you got into this end of it.
Well, my name is Samuel Dunston. I've been in the life insurance business for 65 years.
65.
I've sold life insurance in the South and in New York. And I've sold policies from 2 cents a week to $20 a week in premium.
Oh, my
And we
goodness.
specialize in insuring people human life values.
And that's amazing. A lot of times people think that insurance is out of reach, it's not affordable. But when you break it down like that to just pennies a week up to $20 a week, that means there's a medium out there where you can definitely get something that would be able to carry yourself forward and be of benefit to your family. How's the insurance industry changed 65 years ago when you got into this? That's a lifetime ago for a lot of people. How was the industry then coming into it? A young man, you're fresh into this business. How was that for you?
Well, 65 years ago, we used to go to people's home once a week and collect 10 and 15 cents a week. And we collected. And we would have a little book, and they would sign the book. And to pay them every 3 months, we'd give them a gold star. To pay them every 6 months, we'd give them 2 gold stars. To pay them once a year, we'd pay them extra gold stars. But over the last 25 years, we solicit people on their job and they duck from their salary, which is much easier. And you know, most people spend what they make, but if they pay it before they get paid, it's better for them.
Right, because it's almost like you don't miss the money.
Right. We spend what we get.
And that's human nature. You
Right.
definitely are going to do that. So if you have something that comes in, that $20 or $30 that comes out your check, that's why they do that with most health insurances from your job. They take it out, and what's deposited, that's yours after everything has been come out.
Right.
So where in the South exactly did you start?
In North Carolina, Youngsville, North Carolina,
Okay, so
in 1956.
1956. Wow, that's a long time ago, and definitely the industry has changed tremendously.
Oh, sure.
Looking at it from then to now, is there any elements of the past that you kind of wish were still the same, or elements that you still kind of hold on to?
No, because today, if you were going to people's houses, you have problem getting robbed, and just a lot of problems. Today, you see people at their workplace and they duck from their salary. It's much easier for you and much easier for people.
To definitely be able to do that. That's very, very true. Let's talk about the different types of insurance. Now we know about whole life. There's term life. There's so many different kinds. I mean, you're the specialist, so kind of go into what are the traditional kinds of plans that somebody can go into.
Traditional life insurance is whole life insurance. whole life insurance is like what it says. It lasts as long as you live. Whether you pay it as long as you live or not. Because it builds up value that will carry itself if you can't afford to carry it. The other type is term. Term is for a certain length of time. And when term is up, the term is up. Or if you miss a month and a half premium, regardless of how long you had it, you have no insurance.
Now that's mind-boggling to me because I know there's terms. I've had people try to sell me term insurance and tell you, okay, you do a 10-year term, a 15-term, 20-year term. And no one has ever mentioned that point to me, that if you miss 1 month and a day, you're no longer covered. And that's, I think, a driving home point that a lot of people do need to know about, and that a little later on we'll kind of go over what are some of the things that people really do need to know about. There's a lot of myths, there's a lot of misconceptions where it comes to insurance, and I think there's a lot of things people just don't know.
Well, normally the reason people buy term is because they normally have a mortgage, some financial need, and they want to cover themselves in case if they pass away at the lowest possible rate. But they also have to have a guarantee that if they can't carry it, do what they're supposed to do, or pay what they're supposed to do, they're having a gamble. So you gotta pray that you stay healthy and be able to pay. That's the only reason people buy term. But if you can afford it, just buy less amount, but buy a whole life that will ensure your human life values, whatever they are. At least you have some guarantee.
Absolutely. So what are typically some of the steps if somebody wants to go ahead get a whole life policy? Typically, there's a little bit of a process. I know there's health evaluations, things like that. So, fill us in.
Basically, when you apply for insurance, you tell the truth. If you've been to the doctor within the last year or 2 years, you tell the truth. You tell the truth and come to issue the policy, you're covered immediately. If you have an illness and you don't know about it, you're not responsible. But if you know about it, you are.
So, what could really happen? You could be penalized for withholding that information, of course. And the worst case is they would cancel the policy.
Well, if you don't cancel the policy, if you die within the 2 years, you would just get your money back because you didn't tell the truth.
Okay.
But if you live longer than 2 years, you would be paid.
And that is across all states.
Right.
And when you take out an insurance policy, state of New York, and you were to pass away in a different state, are these transferable? Does it go within just the overall American jurisdiction? How does that really work?
It will go wherever you are, wherever you buy it, wherever you die. It doesn't make any difference.
Okay. Very, very interesting topics. I mean, there's so many little intricacies here. So glad to actually have someone like yourself to fill us in. So we'll take a quick break. We'll be right back. You're watching Beyond Focus TV. Stay with us. Welcome back. You're watching Beyond Focus TV. I'm Lydia Patel, sitting here with Sam Dunston, National Allotment Insurance Agent. So, Mr. Dunston, tell us a lot about life insurance. We're here. This is our segment. We have some people who really want to know a few things, particularly about term. So let's say you're 40 years old. You want to buy a 20-year term or 30-year term. how would they go about doing that? And would that be beneficial for them to do that at 40 years old?
It would depend on the purpose they want to serve. If you have a mortgage, for example, a 20-year mortgage, you probably want to get a 20-year term to cover that mortgage. Or you may want a 30-year mortgage, or a 10-year mortgage, or a 1-year renewable term term policy. So all of it depends on the need that you have.
But if you go ahead and do that, let's say you do it for mortgage purpose, and the term is up, that's just it. The term is up. You don't actually get any money because nothing happened, so to speak. So you were just paying that monthly premium for the 20-year term.
You were basically buying peace of mind.
And that's what a lot of times people have said, which is true. Insurance is peace of mind. So at the end of the term, nothing happened. A month down the road, something happened. There's no recourse on that.
No.
Wow. So that's something to think about. Now, getting whole life insurance later on at an older age obviously comes at a higher premium. Could be a little bit harder. Let's talk about what are those cases for older people, which 40 years old isn't even that old anymore. Before, that was looked at as an older age. Now 40 years old is 40 is like the new 30. You know, people are 40 years old, looking great, still in prime time. Many women are waiting until they're 40 to now start having babies. So, it's different from how it was 25, 30 years ago. So, for these women who are now starting families a little bit later, looking to now get insurance, what's your take on that?
Well, they could buy whole life, they could buy term. Depends on what their human life values are, the budget, what they can afford to pay. If you want a $1 million whole life policy, you can get a $500,000 term, $500,000 whole life, and to balance out what you have. So after your 20-year term is out, you still have the other $500,000 left for the rest of your life. So you can tailor-make the policy to suit your specific needs.
Now, to me, I wouldn't, and that's always a debatable issue. So people actually have term and whole life simultaneously at the same time?
Yes.
And that's only for the reason of offsetting cost.
Right.
I don't know, but I would just get the money and just try to make it all whole life, because at the end of the day, after that term is done, they're both peace of mind. So I might as well just tweak that budget and try to get that. And wouldn't that be more of a feasible thing to do?
It would be more feasible if you could afford the whole life.
And $1 million term, or not term rather, $1 million whole life policy, typically on average is what cost monthly?
All depends on your health condition.
So let's say 35-year-old female, non-smoker, looking to get $1 million policy.
I don't know offhand because there's so many different types of whole life policy. You could get a adjustable whole life policy or a regular whole life policy. It depends on the need that the person would have.
Now, you just brought up two other little points that we could go into. What is an adjustable whole life policy?
It's actually part term and part whole life. You can tailor make a plan to suit your needs.
Okay.
The whole purpose is to ensure your human life values at the best affordable way for you.
And that's pretty interesting, because a lot of times people don't really see that, they think it's costing them hundreds of dollars every month, which it can, of course. But you brought up a very good point earlier in the program where you said maybe lower the value of it, maybe bring it down to $200,000 and bring your premium down, but that would still give you whole life.
True.
Now, when you pass away and you deal with your final expenses, is it true or false that is taxable